Something very weird is happening right now. BlackRock, Fidelity, and every major institutional player in crypto is pulling money out. Meanwhile, the stock market is hitting all-time highs. So what do they know that we don't? Stay with me because the next 4 minutes could save you thousands. Hey, welcome back to the channel. If you're new here, we break down crypto markets, stock picks, and the financial news that actually matters. Today, we're solving a mystery. Why is institutional money fleeing crypto while playing defense elsewhere? Because the answer tells us where Bitcoin is headed next. Let's get into it. Here's the situation. May 2026 was brutal. Bitcoin ETFs recorded $2.43 billion in net outflows, the largest monthly exodus of 2026. That's not a blip. That's institutional money running for the exits, and it's not slowing down. In the first 3 weeks of June alone, we've seen an additional $4.21 billion leave the building. BlackRock's IBIT fund, the biggest spot Bitcoin ETF in the world, has had multi-$100 million redemptions on individual trading days. Fidelity FBTC is doing the same. Here's where it gets weird. The stock market is crushing it. The S&P 500 is at record highs. Tech stocks are soaring. Inflation is sticky, meaning the Fed may not cut rates as aggressively as people hoped. And you know what crypto does when the Fed doesn't cut rates? It corrects hard. But here's the real signal that's bugging me. Institutional investors know this before retail does. They have the data, the models, the Fed connections. So when they start pulling, it's because they're positioning for something, not panicking about something. The question is, what? Let me show you what the data says. Bitcoin started June around $73,200. As of this morning, we're at $66,650. That's a 9% drop in just days. Ethereum dropped harder. It's touching $1,980, which is rough territory. But here's the pattern institutions are watching. Pattern 1, the correlation break. Normally, Bitcoin and stocks move together in the long term. But right now, stocks are up big. Bitcoin is down big. This gap is the problem. Institutions are asking, is Bitcoin broken or is it a buying opportunity? The answer determines whether they come back in. Pattern 2, the volume story. Trading volume is sitting at $70 billion per day, which is healthy. But here's the red flag. The outflows are happening on higher volume. That means it's not passive selling, it's active selling. Institutions are liquidating positions on purpose, not just moving money. Pattern 3, altcoins are moving. This is critical. While Bitcoin and Ethereum are getting crushed, certain altcoins are holding up. Solana, for example, is trading around $74. That tells me the institutional exodus from Bitcoin ETFs isn't about leaving crypto entirely. It's about rotating out of Bitcoin specifically and into perceived value plays. Translation, they think Bitcoin is overpriced relative to the rest of the space. That's a massive signal. Pattern 4, the Fed signal. The Fed isn't cutting rates anytime soon. Higher rates equals higher opportunity cost of holding crypto. So institutions are saying, why hold Bitcoin at $66,000 if I can hold bonds at 5% plus with less volatility? That's not stupid. That's logic. The weird part, they're not moving to cash. They're rotating, which means they expect Bitcoin to come back, but not yet. They're waiting for a lower entry point. So here's where we are right now in terms of price levels. Understand these 3 lines and you'll know the fate of Bitcoin. The kill zone, $65,000 to $65,400. If Bitcoin breaks below $65,400, we're in serious trouble. That's the low from April. Break that and the next support is $60,000. I'm not being dramatic. Institutional support breaks down at those levels. If that happens, watch for a flash crash. The recovery zone, $70,000 to $73,869. Bitcoin needs to reclaim $73,869 to even think about going higher. Right now, every bounce that fails at $73,000 is institutional selling. That's your signal that they're not ready to let this rocket yet. The green light zone, $75,000 to $76,000. If Bitcoin gets above $75,000 and holds it, that's when institutions step back in. Why? Because that's where the short-term sellers give up and the long-term buyers come back. Here's my prediction. We're likely to test $65,400 support before we bounce. Institutions are hoping for a breakdown because it gives them a cleaner entry point. That doesn't mean it happens, but watch for it. If we hold $65,400, Bitcoin consolidates sideways until mid-June. Then, depending on Fed commentary and inflation data, we either bounce hard or break lower. The timeline is critical. If this drags into July, the narrative changes. Institutions start asking different questions. Here's the bottom line. Something is weird. Institutional money is in retreat mode, not panic mode. That's different. Panic mode equals capitulation equals bottom. Retreat mode equals strategic positioning equals lower lows coming. The next 2 weeks matter. Bitcoin either reclaims $73,500 and stabilizes, or it tests $65,400 and potentially breaks it. Either way, the next move tells us whether institutions are done selling or just getting started. Hit that subscribe button. Turn on notifications so you don't miss the break. And remember, this is not financial advice. Always do your own research, check multiple sources, and never risk money you can't afford to lose. I'll see you tomorrow with the next update. Stay sharp.